Assalamualaikum warahmatullahi wabarakatuh and good morning to my respected lecturer and my fellow friends. My name is SITI NORDIANA binti FAIZAL and my metric number is 280790. I would like to present about the audit of the revenue cycle. The revenue cycle is a cycle that includes activities related to the processing operations related to providing products and services to customers, as well as the collection of payments for those sales. A revenue cycle enables companies to forecast cash flow and track every transactions at every stage. Hence, a revenue cycle that is sufficient is important since it will help to strengthen the company's cash flow and reduce the risk of denials. Auditing the revenue cycle is very important for the company because certain issues must be avoided for the company's future performance. The audit objective for revenue and receivables are related with acquiring sufficient audit evidence for transactions and balance. The revenue cycle includes selling transactions that begin with receiving orders from customers, delivering and billing to customers, recording and collecting account receivable. Keeping detailed records on account receivable is a requirement of efficient business accounting. The revenue cycle, which is an important group of business activities that records all transactions from sale to payment. Receipt is one of the components in accounting process. Depending on the type of business, different companies go through different stages of the revenue cycle. However, the overall procedure remains the same. The revenue cycle begins with the provision of a product or service and ends with the payment of the invoice in full. That's all from me. Thank you. I will pass this to the next presenter.
Good day everyone, my name is PRETEEBA and my metric number is 273153. Today I would like to talk about the objective of the revenue. So, the objective of an audit revenue is to get reasonable assurance that the entity's financial statements are free from material misstatement and to provide a report on the financial statement following the auditor's finding. The auditor's objective for revenue are concerned with the obtaining sufficient audited evidence for the transaction and balance. The key issue in auditing revenue cycle are ensure that the sales are neither understated or overstated and sales are genuine. In some cases, financial misstatements are due to errors or incomplete information. However, when the executive deliberately manage the earnings to meet a desired goal, their actions may be considered unethical or even fraudulent. The objectives also can be separated into three, which are transaction objective, balance objectives, and the presentation and disclosure objective. The transaction objective consists of occurrence, completeness, accuracy, cut-off, and classification. The balance objective contains existence, completeness, rights and obligation, and valuation and allocation. For the presentation and disclosure objective, focus on occurrence, rights, obligation, completeness, accuracy, classification, and understandability.
Assalamualaikum, my name is RASYIQAH SYAHIRAH binti ROHIMAN and my metric number is 280073. I will be presenting the audit activity of revenue cycle. There are 7 audit activity, which is customers orders, credit approval, issuing goods, collection of cash and sales and receivable, recording the sales, invoicing customers, and lastly adjustments to sales and receivable. The first audit activity is customers orders. It is a record written as an evidence of orders made by customers. Customers order may vary from different company, however, it usually states the customer's information, orders information, and total cost. It is a control procedure to ensure that the transaction exists and legit by checking the customer's order form that has been recorded. This audit activity is done to achieve the audit objective of occurrence. The second is credit approval. It is the process of assessing the ability of a person to pay or fully pay. It is done by an independent department in the sales department relating to a huge sum of money to avoid having bad debt in the future. This way, company can be sure that credit sales are made to customers that will afford them. The audit objective is to ensure accuracy, valuation, and allocation. Third is audit activity on issuing goods. Customers' order that has been approved will be sent out to the warehouse where the stockkeeper keeps track of all the stocks. Once the stockkeeper has received the order form, he will then prepare the related stock to be shipped to the customers with the letting bill. Regardless of the transportation method, this document must be included with the sent good and must be signed by an authorized representative of the carrier, shipper, and receiver to ensure that the recorded evidence that the shipper has received the good, carrier have received the good, and the customers has received the product. This is to achieve the audit objective of cut-off, occurrence, and completeness. The fourth is invoicing customers. Sales invoice will be sent to customers after receiving the goods by the accounting or finance department to ensure all shipment made is accurate so that the audit objective of completeness is achieved. Besides that, it is to ensure that sales are not fictitious and not recorded twice, and it is correct that the audit objective of occurrence can be achieved. The fifth is audit activity on sales record. Sales report can be done daily, weekly, and monthly depend on the company. Audit activity on sales record is done to make sure that all sales have been recorded to achieve audit objective of completeness. Besides that, to ensure no overstatement or no fraudulent transactions are made to achieve audit objective of occurrence. Other than that, to guarantee sales amount are recorded correctly to achieve audit objectivity of accuracy. Furthermore, to ensure that it is done in the proper period to achieve the audit objective of cut-off. The sixth is collection of cash sales and receivable. It is the process of receiving cash from the customers, depositing cash received to the bank, and recording all the receipts. Receipt is an important evidence used as an evidence of cash flow in and out. Besides cash receipt journal, sellers can also opt for bank reconciliation statement to analyze the cash flow. Therefore, it is easier for sellers to analyze if there is any fraud activity by analyzing strange cash flow behavior or pattern. And the seventh is adjustment to sales and receivable. Adjustment is made when sales are retained by our customers, discount is given to customers, allowances and write-off of an account receivable occur. This is to ensure that all account balances are updated correctly and achieve the audit objective of occurrence. That is all from me. Thank you.
A very good day to Doctor. My name is Lim Hui Qian. So now I will present about the inherent risk and control risk in revenue cycle. So the inherent risk for revenue cycle is related to the cut-off dates for particular types of sales and the pressure from the management to mistake revenue. So an important inherent risk related to revenue transaction is the timing of revenue recognition. So the revenue only be recognized when it's realized or is realizable and earned. So examples of potential inherent risks are derived from business risks such as a decrease in sales due to economic declines and also the overstatement or understatement of sales due to improper sales recognition. So next is the inherent risk to the receivable. Inherent risk associated with receivable is that the net amount is not collectible, either because of the receivable recorded do not represent genuine claims or an insufficient allowance exists for uncollectible accounts. So the example inherent risk affecting receivable. First is the receivable are incorrectly classified as current when the likelihood of collection during the next year is low. And also the collection of a receivable is contingent on specific events that cannot currently be estimated. And the last is the payment is not required until the purchaser sells the product to its end customer. So next is the control risk. The auditor should focus on each account's relevant accession and identifies the control that relates to risk for this accession. The first is the control related to existence or occurrence. Control for existence should provide reasonable assurance that a sales and accounts receivable are recorded only when shipment has occurred, and also the primary revenue producing activity has been performed. So the sales transaction should be recorded only when the title is passed and the company has received the cash or a collectible receivable. Next is the control related to completeness. Control related to completeness are intended to provide reasonable assurance that all valid sales transactions are recorded. For example, transaction may not be recorded because of sloppy procedure. In some cases, company may choose to omit transaction because they want to minimize taxation income. And the last is control related to valuation. Implementing control related to the proper valuation of routine sales transaction should be relatively straightforward. Sales should be made from authorized price list. The control procedures should provide reasonable assurance of the correct input of authorized price changes into the computer files and limit the access to these files.
Assalamualaikum and hi, my name is NATASYA binti HUSSAIN with metric number 280371. So I will be presenting about the audit procedure. So the auditing standard known as the Auditor's Response to Assess Risk or ISA330 cover the auditor's obligation to plan and carry out countermeasure to the risk of material misstatement that were identified and evaluated by the auditor in accordance with ISA 3151 during an audit of financial statement. So for the first one is substantive procedure. So the goal of substantive procedure is to produce data that an auditor can use to demonstrate that there are no material misstatements regarding the accuracy, completeness, and reliability of an entity financial records. For the nature and extent, depending on the situation, the auditor may decide that carrying out only substantial analytical procedure will be enough to bring down audit risk to a level that is acceptable. When testing of control yield unsatisfactory result, the scope of substantive process may need to be expanded since external control is taken into consideration in the assessment of the risk of material misstatement. So for the second one is respond to significant risk. The auditor may be helped in acquiring audit evidence with the high level of dependability needed to address severe risk of material misstatement whether due to fraud or error by receiving external confirmation directly from appropriate confirming parties. And the last one is timing of substantive procedure. So most of the time, there is little to no audit evidence for the present period based on the substantive methods of the prior audit. So the second audit procedure is test of control. Test of control is a controls that the auditor has decided are properly constructed to prevent, detect, and correct a substantial misrepresentation in an assertions are the only controls that are subject to testing. So for the nature of and extent, the type of technique needed to gather audit evidence on whether the control was running effectively depends on the nature of the specific control. For instance, if operating effectiveness is supported by documentation, the auditor may elect to examine it to gather audit evidence regarding operating effectiveness. Expanding the scope of testing a control may be useful when more convincing audit evidence is required regarding the efficacy of the control. So for the timing of test of control, when assessing controls over the entity's physical inventory, counting at the period end, for instance, audit evidence that solely pertains to a specific point in time may be sufficient for the auditor's need. That's all from me. Thank you.
Although the revenue cycle audit is intended to confirm that the business financial statements are correct, it is not unusual for the procedures to reveal the internal fraud. The policies and procedure of control activities of an organization used to guarantee that the management team's instructions are followed. The control activities can be done according to the each of revenue cycle of activities. In a nutshell, someone outside of the organization verifies the accuracy of the sales transaction and the internal controls of the company has implemented to guarantee a company is not inadvertently underreporting its revenue, and also the auditor scale back on transaction testing if a strong control are found to exist. The auditor raised the quantity of transaction testing if problems are discovered.